Gold is approaching a major liquidity zone where smart money is quietly preparing its very next move. Right out of the gate, my primary focus today is a high-probability bullish setup targeting buy-side liquidity at 4416.70 and 4447.70. But there is one specific condition that absolutely must happen first before we commit a single dollar.
Most retail traders, they're looking at the exact wrong level right now. If you look at the equilibrium consolidation on this H1 dealing range around 43.98, the retail mindset sees a simple breakout play, up or down. But let me show you where institutions are actually targeting and why this current range, well, it's nothing more than a trap designed to engineer liquidity.
So let's get right to the outcome before the explanation. My bias today is strictly bullish. We're looking for a massive expansion toward external buy-side liquidity, specifically targeting the 4416.70 and 4447.70 levels. That's the drawn price. And over the next few minutes, you're going to see exactly how understanding this path is the only difference between trading alongside smart money or becoming their liquidity.
Let's dive right into the institutional order flow.
To understand why institutions are targeting these exact levels, we need to step back from the intraday noise. Just look at the higher time frame narrative here. Notice how the daily and 4-hour structures show this massive expansion right out of the 43.18 discount block. We had a deep sell-side liquidity grab into previous lows, and then aggressive bullish displacement higher. This proves institutional buyers are firmly in control. Price swept internal sell-side liquidity at 43.18.70, topped a robust higher time frame discount order block, and now it's seeking to draw price toward external buy-side liquidity resting right above those relative equal highs. The market has completely tipped its hand. Now, as we know, markets rarely move in straight lines. They need fuel, and that fuel almost always comes from macroeconomic catalysts. Today's high-impact Canadian CPI data, paired with the underlying US-Iran geopolitical tensions, these won't necessarily dictate the overall trend, but they are going to act as our volatility engine. Institutions use these high-anxiety events to rapidly sweep internal liquidity, trigger retail stop losses, and trap early traders before launching the real move toward those structural targets.
So let's break down the exact executable ICT trade plan for today's session. Since we understand the higher time frame narrative and the catalysts at play, here is the primary blueprints. We are hunting for a highly precise buy entry within the 43.85 to 43.90 discount zone. Why there? Because this specific area houses a critical 15-minute fair value gap, replacing our stop loss firmly at 43.70, safely below the recent internal swing low. And by taking partial profits at our first major liquidity target of 4416.70, we're locking in a strict 1 to 3.2 risk-to-reward ratio. This is what institutional precision looks like.
But here's the problem. At this exact moment, looking at the 15-minute time frame, there is absolutely no trade. The required smart money confirmation simply hasn't appeared yet. Price is just consolidating in equilibrium without a fresh lower time frame liquidity sweep. Stepping in right now, that's just gambling on direction, and we don't do that. Instead, we sit on our hands and wait patiently for this exact 3-step sequence to unfold inside our entry zone. First, we need a deliberate sweep of internal sell-side liquidity, dropping below 43.90 to completely take out early buyers. Second, immediately following that sweep, we need to see a decisive bullish market structure shift. I'm talking about a strong displacement candle breaking recent lower timeframe highs. And finally, that displacement absolutely must leave behind a fresh 15-minute fair value gap. That sequence right there, that's the undeniable footprint of institutional sponsorship. Which brings us to the retail liquidity trap. This is the scenario most traders are completely ignoring. It's exactly where the trap is being set. Buying blindly into the current equilibrium consolidation around 43.98 is a surefire way for early retail buyers to become the liquidity for smart money. They see the bullish higher time frame trend, FOMO kicks in, and they just buy the middle of the range. The market is flashing a massive warning signal, and they are walking right past it. Just compare the two mindsets. Retail logic says to buy the current equilibrium and place tight stops below the consolidation. Smart money logic? Well, they know exactly where those stops are resting. Smart money will deliberately engineer an internal sell-side sweep, pushing price right down into that 43.80 to 43.90 zone, specifically to hunt those stops. They accumulate their massive long positions using retail sell stops as the counterparty. They trap those traders and then launch the true expansion toward the 44.47 buy-side liquidity pool. This is the liquidity sweep scenario that changes everything. Now, as professional traders, we always have to know when our narrative is dead wrong.
Keep a very close eye on 4318.70. This is our hard invalidation level. Any sustained break and close below this completely destroys our institutional bullish narrative. It tells us the market has shifted towards seeking much deeper discount levels. If 4318.70 breaks, our bullish bias is instantly neutralized, no questions asked.
Let's do a quick final market recap to lock this in.
Here are the crucial parameters for today's gold setup. Maintain your bullish bias based on that daily and 4-hour order flow. Keep your eyes glued to those external liquidity targets above 4416. Whatever you do, do not force a trade. Wait for the controlled pullback into the 43.85 discount zone and make sure you see that 15-minute confirmation sequence we talked about. Respect the 43.18 invalidation level, and above all else, strictly enforce your risk management protocols, risking no more than 0.5% to 1% per setup. Remember, capital preservation is your #1 job.
The market is a highly engineered machine designed to transfer wealth from the impatient directly to the patient. Wait for your setup. If you found this explainer on smart money concepts valuable, go ahead and subscribe to ICT Market Theory. And if you'd like to trade alongside these setups, you can find the FXTM account link in the pinned comment below. The trap is already being set, so the only question left to answer is, will you provide the liquidity today, or will you trade with the smart money?